Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, and today we're going to be speaking about taxes, insurance, escrow. Oh my. A lot of big words here that some consumers don't get a chance to deal with every single day. And when they look at cost worksheets, they sometimes look and say, hey, maybe there's too much money on here being collected, or why is all this money being collected in regards to the costs needed for me to obtain a home. And the first one that we're going to look at and talk about here today is what we call house insurance, homeowners insurance, hazard insurance. What's challenging about understanding this is that you can get a quote from multiple different companies, and there's lots of different prices that exist for those. Generally, if we're looking at apples to apples, the insurance risk should be the same. And so, but being that there's lots of different variables out there, homeowners insurance is kind of challenging for lenders to quote. So here at Mortgage Specialists, we like to quote more on the high end side than the low end side. But when it comes to putting enough money aside for your escrow account and for your payment, generally all lenders are going to make you pay a whole year of homeowners insurance in advance. And why are they making you pay a year worth of insurance in advance? Basically because they don't want consumers to be canceling their house insurance and then something happen to the home, like it get burned down, get hit by a tornado. And if you have a $200,000 loan and there's no more house anymore, that lender is going to be very upset with not getting their money back and their loan getting paid off because the insurance was canceled. So all lenders are going to make consumers pay a whole year in advance. And then as you make your payments, money goes into that escrow account for the following year to prepay your insurance a full year in advance. That's sometimes challenging for consumers because they're used to paying their car insurance every single month as they go, and that should be fine. But car insurance and homeowners insurance are different because generally the loans you take out for a house are quite a bit higher than it would be for a vehicle or an insurance of that nature. The second discussion we're going to talk about here is property taxes and how do we calculate property taxes. That's the easiest part for us lenders is because we can go to the county assessor site and the treasurer site to look up what your taxes actually are. And sometimes you'll go to the assessor site and they'll say the house is worth $0 or it's homestead exempt. But to calculate your property taxes, we just take your assessed value, what the county says your house is worth, multiply it by the tax levy, and that gives us how much taxes there are per year. So a lot of people don't quite understand what that actually means in regards to how much your property taxes are, but your property taxes are going to be the assessed value times the tax levy. And the assessed value generally can go up or down throughout the year, where your property taxes are going to stay, the tax levy is generally going to stay the same every single month, every single year, unless for some reason you're annexed, for some reason the school districts change the way they're collecting taxes, things like that. But generally speaking, tax levies are going to stay the same. So what we are doing is now going to create what's called an escrow account, and we have prepaids. So first of all, an escrow account is just money set aside for your homeowner's insurance and your taxes to go in a separate account that when your taxes and your insurance come due, the lender will pay those for you. That's called an escrow account. And prepaids are basically prepaying the money that's needed into those accounts. So we have enough basically reserves or savings so that when your taxes or insurance come due, there'll be enough money in there. We have a little unique area in Douglas and Sarpy County, which is the Omaha area, that we collect property taxes and insurance, just property taxes, different than the rest of the country. So it makes it more expensive for the buyer just because the way we collect taxes are in the arrears, meaning we collect for them and we pay this year's taxes next year, basically. But it all works out for every buyer and seller equally. That's just how it's structured. But we have to put money up front into that escrow account so there's enough there for when they come due. Then generally, we're going to see you as a client receive what's called an annual escrow account disclosure. So every year, your lender is going to look at how much money they paid out in insurance this last year, how much they paid out in property taxes, and then they're going to say next year we received an invoice that your insurance is going to go to this, and your property taxes are going to go to that. And they decide, are the numbers gone up or gone down? If they've gone up, you can either make up that difference and write a check to put in your escrow account, or you can have your payment of your mortgage go up to cover that additional escrow amount. Either way is acceptable. A lot of people like having the same payment, and some people don't quite understand how to understand the annual escrow account disclosure statement, and they reach out to us every year saying, hey, Brent or mortgage specialist, please tell us what this means. I'm not understanding these numbers, and I don't understand why my payment keeps going up. And generally it's because homeowners insurance and taxes are going to be going up every year. As we've seen every cost of goods generally go up. There's not a time that we generally see taxes and insurance come down. Is it a possibility? It is. But the lender is going to give you a month to 2 months notice before that payment is going to change to give you time to figure out what you would like to do with structuring that escrow account for the tax and insurance and the payments that's made. When we're sending you estimates of understanding what your down payment, closing costs, and prepaids are, we're going to show you that we're prepaying that insurance in advance. We're going to put 2 or 3 months of homeowners insurance in your escrow account. And generally for property taxes, it's going to be a total of 8 months. Whether we reimburse the seller for 2 and put 6 months in the escrow account, or put 2 months in the escrow account and reimburse the seller 6 months, 8 months is generally the correct number to put enough money in the account to have it be where you come to closing, there's enough money that's needed to pay all the costs of down payment, closing costs, and prepaids to purchase that new home. Again, we're here at Mortgage Specialist to help answer any questions, to educate you with any terminologies that you might understand so that you can make the best decision for you and your family. We're just a phone call away at 402-991-5153, or you can check us out on our website at mtg-specialist.com. We'll see you all next week. Make it a great one. Mortgage Specialists. Driven, trusted, reliable.